Well, that was obvious. Hi, Dean Jenkins with FollowMeTrades.com, and I'm showing the S&P 500 ETF, the SPY, on a monthly chart. So every price bar here is a month. This is a very long time frame. And I say that was obvious because if we look back, at various corrections, here's the one that started, the dot-com bust that started in late 2000. Pretty big pullback. And then we had the subprime mortgage deal, right? That pulled back pretty significantly. And then we had COVID, which was a very sharp short-term pullback. If you look at the rise from COVID, this is a really big steep angle rise. And you look at this and you just look at history and you go, well, that kind of has to correct at some point, right? And here's what I say is obvious. For every one of these prior corrections, there was news building, right? And then the thing happened, and then people look back and go, well, that was obvious, right? .com at its peak, a lot of people concerned about valuation. There was all kinds of news about the real estate market, what was going on with the subprime thing. And even with COVID, there were early warnings like, hey, man, something's going on here. And then the market corrected very sharply. So here we are with a very sharp angle rise, incredible run. And if history is any indication, it's going to correct. That's just a normal, healthy, part of ongoing market cycles. So will it be next week, next month? I don't know. I think it'll start this year. And there's some suspects. What would trigger the correction? Well, we have a housing bubble, right? The price of real estate is just off the chart. Inflation's a problem. We've got, through COVID, we had some protections for evictions and foreclosures. It's coming to an end. Energy, energy prices spiked or pulling back. They could spike again. And who knows, some kind of international conflict. But when the correction happens, we're going to look back and go, oh, that was obvious, right? Right? We had rumblings. Now, we don't know what it's going to be. We can't predict exactly what the trigger will be. I've switched to a daily time frame. Last week, early in the week, we had a little pullback. Didn't even approach the 50-day moving average, middle of the Ichimoku cloud, and then rallied. Thursday found support, Friday rallied. We've touched, even penetrated the 50-day so many times, right? We will get a reversion to the mean, at least, close to the 200 at some point. Probably one of these things, housing, inflation, evictions and foreclosures, energy, international conflict will be the thing. But something will trigger it. And then when it does, there's going to be amazing opportunities. Now, there's opportunities now. It's difficult. It's a trending market. It's losing momentum. We got some earnings coming up this week. That'll be, sort of interesting. We got Best Buy, Medtronic, Autodesk, Dollar General. Last week we had a lot of the major retail players, mixed, thing. Home Depot reported good and got hammered. Lowe's reported good and did well. So we'll see. But I stand by my thesis that there's a correction coming just because of a normal, healthy kind of cycle. There will be some trigger, and then it will snowball, and it'll correct. And when it does, those who are prepared, we're going to make a lot of profit. Right? Maybe a few head fakes, a few false starts, but meanwhile, there's some decent profit to be had. You can go long, you can go short, various sectors. We're doing that. But when it happens, look out, man. It happens fast. Now, it doesn't happen in the blink of an eye. We get a warning, and then we use a trading system, we use risk control, we use technical analysis, and we take advantage of it. So stay tuned, and when it starts to happen, man, I'll give an update, and we'll be trading like mad. Till then, here we are. All right, that's it for this week. When things change and it gets clearer, I will send an update. All right, take care. Catch you then.